Katjes is in a unique situation in that it's a privately owned business that is engaged in M&A activity. But how do you think M&A activity from a privately owned business differs to when a listed company engages in a transaction?
Well, I don't necessarily see too many differences. Okay. Maybe two. One is obviously if you're listed, stock exchange listed with equity, that is. Obviously you've got different financing capabilities. Although we have a listed bond, so at least to the debt markets, we've got sort of similar financing opportunities. And the other thing is, I would say, at least in our industry, most potential targets are also family owned. Yeah. And they are much more comfortable with a family-owned business being a purchaser rather than a corporate or even private equity buyer. So we've got a advantage there, I would say, in terms of approaching and talking to targets.
And what about this pressure that some of the listed businesses face at the moment, where shareholders are saying you're sitting on cash, you need to spend it in a certain way? I presume you don't have that pressure from your shareholder and owner.
Yeah, that's correct. We look at our business in a very long-term perspective, and we also only do things that we consider to be sustainable. But we're also professional, and we also want to earn money and get a return on our on the invested capital. So from that perspective, we look at those metrics. But indeed, we don't have the same pressure on a sort of quarterly basis as a listed business would have.
Okay. Now, Katjes is bucking the trend slightly when it comes to M&A activity. At other conferences that we've spoken recently, companies have said, particularly in the consumer sector, that they place a huge amount of emphasis on some of the emerging markets from a demographic point of view, but also from a spending capacity point of view, from the emergence of the middle class. Katjes is slightly different, and your focus with regards to M&A activity is in a different market. Can you tell us about that, please?
Well, we're focused geographically on Western Europe because that region for our product, which is sugar confectionery, is sufficiently large. It has 2/3 of the European population live in the markets: Germany, France, the UK, Italy. So, and that is in the end what our product needs: is mouths to eat our products. And also from an income perspective, that is where sort of the money in Europe still is, from money to spend on these kind of small luxury type products. And that's why we focus on these areas, despite the fact that possibly the demographic situation in countries like China or India is favorable to provide more growth. But we don't necessarily need the market to grow. We just need opportunities to acquire, to grow ourselves in a market that may be stable or only slowly growing.